All right, we're live. So welcome back to Dapp University. So today we're going to talk about an insane crypto project that just absolutely blew up. All right, this is a story that I'm seeing everybody talk about online. So I'm going to catch you up on all the details and what you need to understand about this, because this is one of those situations where the truth is stranger than fiction. This happens a lot of times in crypto where things happen that are just completely unbelievable. So I want to talk about the day in this video because I think you're really going to like it. We're going to look at that. We're going to look at the crypto prices, some other news updates, and a lot more. So before we get into that, if you're new around here, hey, I'm Gregory, and on this channel, I turn you into a blockchain master. So if that's something that you're interested in, then smash that like button down below for the YouTube algorithm and subscribe to this channel. And if you want to learn how to become a blockchain master step-by-step, start to finish, then head over to dappuniversity.com/bootcamp to get started today. All right, so we got a bunch of people jumping in the chat here. We got Culture Highs, Lee Robert, Jamjitsu, let's see, Mike, Franklin, Gabriel, Ocean, Ray, Jay, Tim. Welcome, welcome, welcome. All right, so let's get into this. So what is this insane story that happened yesterday that's got everybody talking about it online? So it's a cryptocurrency called Iron, and Iron Titanium token. Okay, so what happened here? So what we have to understand is so basically, this was an incident involving a lot of different people. Basically, everybody who's been participating in DeFi, like jumping into these smaller cap cryptocurrency project experiments. Some of the things are really intriguing on the surface, but the lesson to be learned here is you always have to really be careful whenever you're participating in these projects because they're so experimental and they can totally blow up. So, like in my opinion, like while a lot of DeFi has a really strong future ahead of it, some real solid use cases, there's going to be some bumps in the road along the way. And, nobody is safe when we're experimenting with this kind of technology at this level when you're taking on high risk like this. So we saw lots of other people involved in the situation. We saw Mark Cuban himself, all right, actually in the Discord servers for this project, participating in this. And he took some hits as well. So even the billionaires aren't safe. So let's take a look at what happened here. So I'm going to actually pull up an article on my screen here because there's a lot of details on this particular thing. And I'm going to pull up some helper content from my good buddy Anthony Sassano here with the Daily Gwei. Definitely go check out his channel, check out his full article. I'll go ahead and put a link to this in the chat right now so you all get full credit to Anthony. I'm going to get him to help me a little bit with this explanation, because I didn't participate in this project. I just watched from the sidelines about what happened, but I'm trying to give you my best explanation. So basically, it all started off with a stablecoin project over on Polygon. So really quickly, what is Polygon? Matic, basically it's a scaling solution for Ethereum. Matic is their initial scaling solution that sits to the side of Ethereum. You can bridge over to it. And it now has an entire DeFi ecosystem on top of it, okay? And so basically, you can do a lot of DeFi-based applications with smart contracts, with tokens over there. And you can, it's a lot of like what happened on Ethereum last year during the DeFi Summer 1.0. They're kind of calling this a DeFi Summer 2.0 over on Matic Polygon because it's cheaper to use, faster transaction times, stuff like that. So we saw a project launch called the Iron token. Okay, so you can see this here. You can see the price history over the past 14 days just absolutely crash into the ground. And then the Iron Titanium token, or Titan, pump, 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 and then absolutely crashed to the floor. So I realize this, I'm taking a very humorous tone about this. I hope that like nobody, in the chat here was affected by this. And if you were, I hope it wasn't like, terrible. So my condolences for sure. I guess part of the humor that I get out of this is just how crazy these experiments are and how the truth is stranger than fiction sometimes. So basically, what happened? So Iron is an algorithmic stablecoin. So what is that? Well, basically, if you think about stablecoins like USDC, for example, or DAI, these are stable coins. Their cryptocurrencies price don't change. They're pegged to the US dollar. The whole idea is to protect you from the volatility of cryptocurrencies themselves. You're not buying to speculate on price. You're buying it to actually keep your funds, pegged to the US dollar. So they work in different ways. So USDC is a fiat-backed stable currency. Basically, it has dollars behind it where you can always redeem your cryptocurrency for dollars. DAI works differently. It's a crypto-backed stable coin. So we have actually cryptocurrencies supporting the value. But then we have these experiments that have been, coming out, and kind of, not all of them have been very successful. We basically have algorithmic stable coins where they try to implement some they try to automate the process of maintaining the peg for the actual cryptocurrency itself. And some of them work differently than others. I'm not going to pretend to be an expert in how the actual Titan token worked itself. Okay, it's kind of complicated. Like I said, I didn't get personally involved with this project, but I guess the details of how it worked aren't as important anymore because it didn't work out so well. So basically, what happened? So what happens is basically they had this algorithm that maintains the peg, and it lost its peg. Okay, but then there's two tokens in place here. There's the iron token, and then the iron titanium token. Okay, so iron is the one that basically is the stable coin, which is now 66 cents when it should be about $1. And this started to lose its peg. And then basically you have other people that have this separate token that's associated with this project, which were buying it. They were using it to be liquidity providers. And then basically, as this thing started to lose its peg, the entire thing just went haywire. All right. And, people who were liquidity providers started pulling their liquidity out of the pools, which affects the people's ability to cash out of their projects, affects the price, all that type of stuff. It was just a major mess. Like I said, nobody was safe. We saw, Mark Cuban involved in this whole thing. He originally wrote about this in his blog post that I actually made a video about yesterday, which I don't think this is, you win some, you lose some. But he actually wrote about how he was an LP on Matic. Well, he's also an investor in the Polygon Matic scaling solution. But yeah, I saw some screenshots floating around where he was talking about, we're all gonna make it, and then it just didn't work out. So that's the news everybody's been talking about with DeFi over on Polygon and what happened yesterday. This is absolutely crazy. Like I said, this is a situation where the truth is often stranger than fiction. You see a billionaire like Mark Cuban in the Discord chat with a bunch of DeFi degens who are like aping into a brand new algorithmic stablecoin project experiment, and it all kind of goes south. And so there's a lot of people like kind of floating around saying, like one of us, where Cubans like, kind of get involved in this. And I saw some memes floating around where they talk about, this nuke down to zero being like the Cuban Missile Crisis. That's the nickname that they've got floating around for it. So, as always, the main takeaway here is it's funny in one sense, it's tragic in another, because there are likely people who got involved with this who lost probably more than they could afford to lose. That's just kind of the nature of crypto, human nature. I warn you about this heads up on this channel all the time. As always, be super careful when you're participating in DeFi, especially with these highly experimental projects with new technology. You can lose money. So let's go ahead and check on what's going on with the crypto markets today. Let's see what are people saying in the chat here. Cuban Missile Crisis, yeah. So get to the point. Yeah, it's kind of hard to explain. This is a pretty crazy thing with a lot of moving parts, but that's the high level. That's what you need to know. So let's look at crypto prices. So we can pull up what's going on with Bitcoin price, what's going on with Ether. So really, we're about the same as yesterday. I'm gonna actually kind of take a look at what's going on in Bitcoin with a little bit of basic TA here. Again, I'm not a very skilled TA person, but what I see a lot of people talking about around online right now who are good at TA is how important the moving averages are right now to determine whether Bitcoin we're going to confirm a bull run or not. Okay, so I think it makes a lot of sense, right? Because basically moving averages are an indication of momentum. And in order to confirm bullish momentum for Bitcoin, we need to get above some of these long-term moving averages, particularly the 200-day. So I think that makes total sense. I'm on board with that thesis. We're still a ways from that. We do see a potential death cross coming into play here. Some people say it's not a death cross because both trends aren't moving downward. We'll see. Some people say the death cross doesn't matter. But one little, important kind of piece of hope that we can see here is if this is a low and we actually print a green candle for today, Bitcoin is volatile here, but the important thing that you can see here is Bitcoin making a higher low, which would be a short-term encouraging thing. Now, long-term, we don't know for sure. Again, I want to see us get above those moving averages to confirm bullish momentum going forward. But right, I'm somewhat optimistic. All right, so we'll just check. We'll just have to wait and see what happens there. So let's go on with the Ether price as well. Let's look at ETH USD. Let's just look at the Coinbase chart here. So the Ether price looks like, we're still kind of in a downtrend. for Ether. We're in a somewhat short-term uptrend for Bitcoin. Ether. Yeah, I mean, I would like to see us basically start making some, higher highs right here, and also some lower highs, and also to get above some of those, maybe like this moving average here before we're a little more bullish on ETH. Also, I mean, I still think we're in a situation where Bitcoin's going to lead the market in this to kind of see what's going on with the alt crypto market. A lot of people are absolutely obliterated with altcoins that went down quite a bit. I think Bitcoin's the star of the show right now, and it's going to lead the market. And so if Bitcoin decides that it wants to be bullish, I think that's going to be the first step before the rest of the market decides to, follow suit. Because like I said, I think a lot of people are wiped out who invested in smaller cap coins, who are, not going to, they just don't have the money to jump back in. And I think we basically are going to see bigger, going back to the institutional investment thesis, where lots of bigger players are going to invest in stuff like Bitcoin, Ether, stuff like that, and that'll probably lead the market. So we'll see. Basically, I think the point here is a lot of people who are waiting to just jump around and find deals on these low cap altcoin gems from a retail perspective. A lot of them have just been wiped out. Somebody says, where did Quickswap come from? I still think Uniswap will melt faces, but when? So Quickswap is a Polygon, basically, version. So it came out a while back. It's been doing pretty well. Somebody says, do I recommend Yearn Finance? So yeah, Yearn's definitely an awesome project. That being said, there's always risk involved with these DeFi projects when you're using them to custody your funds, or not custody, but use your funds. So let's actually take a look at another. Let's just see here. Let's take a look at another indicator here. If we talk about Bitcoin actually leading the market, and determining whether we've hit a bottom right here for Bitcoin, I'll look at a pretty important graphic here, an opinion. Okay, so this was from Fidelity Director. Let's see here. Fidelity Director of Macro, Global Macro at Fidelity. All right, bottom is in for Bitcoin. That's his opinion, at least. Of course, not investment advice, but his opinion. And I've seen some other people say that as well. Well, time will have to tell. But if that's the case, the whole thing is if Bitcoin has bottomed and we are going to trend higher, I don't think it's likely that we're going to see this just insane V-shaped recovery. I think we'll still see some consolidation for a while and see some slower trends higher. But that is definitely the opinion of some big people out there. So let's see here. So somebody says, I came late. Have I already named the crypto? Yeah. So the crypto project that happened that absolutely blew up was the Iron token. Okay, the Iron Titan. So here it is, Iron. It's an algorithmic stable coin, and then Titan, it's the other token associated with it. So it blew up in a bad way. All right. So basically, like, it's a stable coin that lost its peg, down to 70 cents. The Titan token basically went to zero. So you'll see some people who like try to buy this as a price appreciation opportunity, where it's a stable coin hoping it'll get back to its peg. We've seen other algorithmic stable coins blow up and actually, get network effects and adoption and get close to its peg again. But it's a super high risk thing. Because it's one of those things where, like, I see people who try to buy cryptocurrencies after they experience some really tragic thing happen. At least cryptocurrencies that are designed to appreciate in price. And they'll say, well, if I can just make a speculative bet when like nobody wants it, then I can earn a certain percentage of the supply, or as a certain percentage of the market cap if the price goes back up. But like basically with a stable coin, it doesn't matter as much. Like your biggest hope is that it gets back to its peg. And like owning a percentage of the market cap doesn't matter quite as much. So it's like the risk reward's kind of skewed for this type of thing. Somebody says Titan got rug pulled. Kinda, yeah. So let's see, here we go, the question in the chat. So somebody says, is DAI a stablecoin? Yeah, so DAI is a stablecoin. It's a cryptocurrency whose price doesn't change. How does it maintain its peg compared to these other stablecoins? Well, basically, it's backed by other cryptocurrencies, okay? So DAI started out with a single collateral DAI, which basically means that it was backed by Ether only. And then we entered into multi-collateral DAI, where other cryptocurrencies could be used to provide collateral to help maintain the DAI peg to the US dollar. Someone says not a rug pull, flawed code. Yeah, people use that. People use those words interchangeably all the time, like a rug pull. So what do they mean by like an actual rug pull? Basically, think about the image of like you getting on a rug and then somebody pulls it out from underneath your feet and you fall flat on your face. Okay, so that's like that's the analogy here. And most people talk about rug pulls as like a project that's like a scam. You know what I mean? Where like you put money into it and then they just like they do something where you can't get your money back, or the thing that you bought just tanks in price, something to like, you know, manipulate you where you essentially lose all your money. So people use that interchangeably with just like things that have good intentions that, you know, didn't work out. Now it's always hard to say what the intentions are, especially when you're dealing with anonymous people. But I don't think this is necessarily a case like where, you know, people had bad intentions. People use those words interchangeably all the time. People use the word shill all the time when they really just mean promote, but shill actually means dishonest intentions, where you're trying to promote something, you know, for an ulterior motive, basically. So it says, good morning. Thanks. Blockchain Developer Bootcamp is awesome. Awesome. I'm glad you're liking it. Someone says it's a good idea to run your own nodes for your own Dapp. So it depends on what you need to do. I think in most cases, people can use just existing RPC endpoints, but there are definitely cases where you might want to run your own node. Someone says, Death Cross, should we wait? So that's a good question. A lot of people are worried about the death cross. So I'll just pull that back up on my screen here. So basically, let's just see here. People are worried about basically these moving averages crossing one another. It's probably going to happen pretty soon. There are mixed opinions on this. Some people say the death cross is just a lagging indicator of a bearish event that's already happened. You know what I mean? So I don't have a strong opinion on it. Somebody says US dollar strengthening. Is this a bearish signal for global markets? Yeah, it's a good question. You know, we typically see kind of an inverse relationship between, you know, crypto and US dollar for this type of thing. So we'll have to wait and see. So what's the best resource to become a DOGE developer? That's a good question. You probably would just want to honestly learning like Bitcoin development and then applying those skills to Doge. Can I talk about the Bitcoin Taproot update? Yeah, that's a good question. Maybe I'll make a video on that. I know some people are wondering how it works. So we did see, I did see this come up yesterday as well. Let me pull up my screen here. Interesting story. So a growing trend in terms of crypto adoption for institutional you know, investors here. Let's pull up the statistic. I don't have the source on all the data points for this, but if this is even close to true, then it's pretty crazy. So basically, institutional adoption of cryptocurrency is on the rise. You know, we're talking about that being a major narrative for Bitcoin and other crypto market as a whole. And when I was talking about a minute ago, how, you know, Bitcoin seems to be leading the show, and that's what I expect here for the next while. How basically the crypto market is kind of divided into two major food groups of participants. So you have the institutional side, and well, really three kind of participants, what I would say. Basically, the institutional side, which has been around for a while, to tell you the truth, but it's been a big narrative for Bitcoin over the past year, which is Bitcoin has been elevated in status as now an institutional grade asset. You see people like hedge funds, hedge fund managers talking about, like Paul Tudor Jones talking about a 5% allocation of Bitcoin. You see people basically taking it very seriously. Okay, so basically, you know, that's one category, is institutional grade investment, right? And also institutions themselves owning it. So like the Harvard endowment buying Bitcoin last year. We saw Tesla buying $1.5 billion Bitcoin for their balance sheet. So that's one category. Another category is, you know, retail investors, basically people who get on their computer and like watch YouTube videos or Google, how do I buy crypto? And then I would say like another category of people, which were more like people who are kind of deep into crypto. They're still retail investors, you know what I mean? But I kind of keep them in a different category. These are people sort of like here for the long term, like probably like people like you or I. If you're watching this video, you've been around, you're still here, you know what I mean? You're still interested in crypto. So it's three categories. So basically, you know, the institutions can buy a lot of crypto in size and can really help move the market. Okay, so basically, what we've seen happen lately is a big blow up in crypto prices that have dropped. And a lot of the retail participation, which I was talking about a minute ago, is sort of the fair weather people who are here to just chase really fast gains, who are getting on Google saying, you know, how do I buy crypto? And they go register for an exchange and then they buy some crypto trying to make some short-term gains. They just absolutely leave whenever the gains drop. Okay. But now when you get to these big points of opportunity, when a lot of that attention is gone from crypto, is when the actual gains can be made. Okay. And so that's when you see like people like this, and that's why I expect basically larger people who are here for the long term, namely institutions, to be buying Bitcoin after the price has fallen. Because what's happened here? Well, you see that an asset is roughly 50% away from, you know, where it was a few months ago. Now, there's no guarantee that we're in positive momentum back to that direction yet, but the whole idea here is it has price history roughly twice what it was. So you could basically make a 2x on your money if you wait long enough. And some of these institutions are willing to make long-term plays. Okay. Now, some of them might wait for the price to drop lower, try to get that higher ROI and wait for bullish momentum before they try to, you know, make that. But the whole point is here, even though we've seen a lot of attention flee from the space, I mean, just look at the Google Trends, they're down. Look at like any of the YouTube videos that get put out, like they get way less views. All that type of stuff. It's because a lot of that retail hype and mania and participation has left the space. Okay, but some of the things that can really uphold a lot of the value and continue this bull momentum forward is this, what I'm talking about right here. Basically, institutions growing. So listed companies, trusts, and ETPs now control almost 7% of the Bitcoin supply. 7%. Right? That's huge. So like I said, I don't know how to actually verify all of that percentage, but if that's even close to truth, then that's a big deal. Publicly traded firms added Bitcoin to their treasuries during the first 4 months of 2021, more than during the entirety of last year. But will it continue? All right. So more than 6.5 billion worth of Bitcoin, or close to 1% of the crypto assets' entire capitalization, is held by 19 publicly listed companies. Further, 5.75 of Bitcoin's market cap is held by exchange-traded products and closed-ended trusts. Okay, so this was there's a study done by this. All right, and this is a number that we could expect to continue to grow. We did see the numbers yesterday. We're talking about hedge funds having a roughly 7% allocation to cryptocurrencies in the future. So that's what I mean by basically these much larger players being able to actually carry the momentum forward, rather than people who just get tied up in hype and mania and Twitter and YouTube and all that type of stuff, where you can have these like little whales essentially who are, you know, swimming much lower, closer to the ocean floor, you know, who are able to actually, you know, move the needle, and they can buy in size a lot more than you know, smaller retail investors can. So think about it. If you buy $1 billion worth of Bitcoin, You only need a couple people like that compared to thousands of people who are investing, $1,000 to $1 million, into Bitcoin. So that to me is why I still have a considerable amount of hope for this type of thing in the coming months. So we'll see. Nobody's got a crystal ball. Either way, no matter what happens with the price, I mean, I'm here for the long term. Always have been. Nobody's got a crystal ball. So look at Vitalik's tweets talking about EIPs. Yeah, so I saw that yesterday. That'll definitely be something I can cover on the channel soon. So somebody says, how will EIP 1559 affect the current ETH trend? So that's a great question. Nobody knows for sure. It's one of those things, what this person's asking in the chat is about EIP 1559, which is slated for release in late July. It might get pushed back into August, to tell you the truth. We'll wait and see. I have heard some things about potential release dates for this. So set your expectations. It could happen in August, maybe not July. But the whole idea here is that part of the ETH supply is going to get, part of the ETH transaction fees whenever new transactions are created on the Ethereum network are going to get burnt. So basically, if I send you 1 Ether, I pay 1 Ether plus a gas fee to send you that transaction. And then of that gas fee, it's split up in 2 parts, the base fee and the miner tip. And the base fee actually gets burnt. Okay, so that base fee can offset the new ETH that's created whenever the transaction's mined on the blockchain. If there's enough network activity, then that can cause ETH to become deflationary. Now, that being said, we don't know exactly what's going to happen with the price of Ether in the short term. If it's going to actually impact the price of Ether, it'll likely be a long-term effect that you'll see take place, okay? So for a couple reasons. One is just demand for the overall Ethereum network in general. How many transactions are taking place? Fewer transactions are taking place right now because you're seeing some of this activity get offloaded onto Binance Smart Chain, onto Polygon, all that type of stuff. So actual demand for making transactions has decreased somewhat, or not like insane amount. We see people like basically just not buying ETH quite as much as they were before, simply because the mania has died down. All right, so we'll have to see basically how much of that activity is sustained relative to how much is going to get burnt. Because in order for it to truly become deflationary by nature, then you have to have a large amount of activity. Okay, and if we're not just in a mania phase of the bull run, then we may not see the deflationary effects or the price impact on Ether itself, the actual asset, initially. Or it might take some time for that to happen, okay? Someone says Titan had flawed code, apparently. Yeah, I think so. So it's pretty complicated how the whole thing worked. It's one of those things where... Yeah, I wasn't a part of it. I just saw the incident take place and have a pretty general sense of what happened. But I haven't had time to like sit down and actually audit the code myself to determine the exact nature of the blow up. Let's see here. Somebody says the value in crypto is in its ability to launder money. Yeah, I guess you could say the same thing for green cash. It's got a lot of other value propositions outside of that, though. Someone says crypto bubble is just FUD. All right, everybody. So that's all I got for today. As always, smash that like button down below for the YouTube algorithm. Subscribe to this channel if you haven't already. That really helps these videos out so that more people can learn about blockchain. If you're as fascinated with this technology as I am, you want to get your hands dirty, how can you get started today? You can go to my YouTube homepage. You can find my free courses there. They're like Udemy courses, but they're totally free. And if you like those and you want to the next step, or hey, maybe you want to take a master shortcut entirely, I can show you how to become a blockchain master step-by-step, start to finish, over at dappuniversity.com/bootcamp. All right, you don't have to be an expert to get started today. I've helped people with zero coding experience become real-world blockchain developers in a matter of months. So that's all I've got. And until next time, thanks for watching.